But Rajesh, let's just take this question. This is on Bandhan Bank. This is Seema from Dubai, and she's got 30 shares of Bandhan Bank at 278. What should be the strategy right now? She has not mentioned the time frame, but if it's a hold, what's the time duration that you are looking at?
Good morning, Kavita. Good morning, Ankita. Good morning, Kunal. Bandhan Bank has seen very bad days, I would say, from the highs of almost 800, 900 odd rupees to the lows of 100 odd rupees. So that was because of performance and all. Despite the fact that the number of branches they have are huge and they were doing well, the only issue that came was from the microfinance thing from the uh, northeast side of the country, and that risk still persists. But I think all the negatives have already been discounted in the prices. And the medium to short term, maybe in the next 2 to 9 months, we anticipate a price of around 170 odd rupees. So at this point of time, it's a hold from our side.
All right, so hold on Bandhan Bank. But Rajesh, one more question that Seema has sent us. She says she holds Grindwell as well. She's bought at a buying price of 2,600. Wants to know if she should hold it on, say for a time horizon of the next 1 year or so. Clearly, she's sitting at a loss right now. What should she do?
Continue to hold. The company has been doing well. The only issue is the volumes are very low. But I think for investors, volumes doesn't matter as such. But looking at the fundamentals purely, I think it's a hold from our side. And by any chance it falls to around 1,400 odd rupees, it would be a great buy too.
One tech check also, just in case Seema has a shorter outlook. What would you suggest, Kunal?
See, I'll suggest not to buy at current levels, but then wait for a breakout. That breakout for Grindwell Nautil is around 1700 mark. And over the last, I think, 6 months or maybe in the entire calendar year 2025, the stock had faced a major resistance around the 1700 levels. So till the time the stock doesn't break past about these 1700 mark, it's going to be more of a time-wise wait for the investor. That's the only concern which I have in terms of the technical stance for Grindwell Nautil. So it's a good stock. Long-term the charts are very attractive, but price-wise, if you're looking to buy, I would suggest the weight of that 1700 breakout point.
All right, so that's the view coming in as far as Grindwell Norton is concerned. But let's move on now to a live caller who's joining us now. I believe this is Raghav who's joining us now from Chennai. Hi, Raghav. Good morning, and thank you so much for joining us. Raghav, tell us what's your question.
All right. Hello. Good morning, everyone. Thanks for having me. So the question is, I am a long-time investor. So I had a question where would it be suitable for me to get into Havells India as a stock now? Would it be a good buy? And what should be the target price that I should be looking at? Thank you.
And what's your time horizon, Raghav?
Typically it's around I hold it probably for a longer period. It would be like around 3 to 5 years. So that is the time that I'll be. Yeah.
All right, Raghav. So we'll take both a quick tech check and the fundamentals. Rajesh, let me come to you for his question. Havells India, he wants to know if it's a good hold for, say, for the next 1 or 2 years, the time horizon that he's mentioned. Would you suggest that? Because, all these companies, Havells and the likes have, they haven't really moved much, but also we have now the summer season that's starting. Do you see these counters to begin to move now?
Yeah, I think for long term it's a good bet. Be it Havells, Polycab, or the likes. The wire business as it is doing well. The FMEG, that the fast moving electronic goods division, is also doing well. The only issue at this point of time is high copper prices, which are going to dent their margins in the short term. But for a longer term investor, I think it's one can go buying in a staggered way. Buy a small quantity now and buy something if it falls by around 25, 40 rupees, then so in a staggered way one can continue to accumulate.
All right. Okay, in a staggered way, one can plan to accumulate. But then Rajesh, from cables to power, this is a question coming in from Mr. Triambaka from Mysore, Karnataka, and he's bought CG Power, 100 shares at 698. It's a long-term buy, and he wants to know whether he can average at this particular level, and if it is a hold, it's a long-term hold, but still he just wants a time frame, a year or so, if you can recommend.
Of course, one can buy a strong company doing very well after the change of the management. They have been expanding their product profile, also moving to semiconductors too. So a lot of things are happening. And the best part is the stock price has seen a good amount of correction from the recent highs. So, but these levels are good levels to accumulate somebody looking for a long term.
With that, it's time for a quick breather. Don't go anywhere. We will keep taking your questions on the other side of the break. Keep sending them in. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now. This is your hour because we are answering your stock-specific questions. And just in case you haven't yet sent across your questions, the number is flashing on the top of your screen. That's our WhatsApp number. Send us the stock's name, the price at which you've bought it, the time horizon for which you want to hold on to that particular stock. We will give you a technical and a fundamental view by our experts. Rajesh Agarwal, Kunal Bothra, our guest on the show, are live. And guys, let's just take one more question. This is coming in from Mr. Singh. He's a senior citizen from Pune. And he wants to know the right entry level in MCX. Considering it's a short-term buy, maybe, Kunal, you want to go first?
Yeah, I think if you're looking to buy MCX with the price adjusted, for the stock price right now, I would look at say 2180 as a good price point where you can consider buying, because that's where the stock coincides with its 20-day moving average and a near-term support. So if you're looking to buy, I think 2175, 2180 is a good zone to buy MCX.
All right, so that's the word on MCX and that's the target price. But let's get a new caller on board now. This is Nikhat who's calling us now. Hi, Nikhat. Good morning.
Hello. Hi. Good morning.
Hi,
Good
Nikhat.
morning
Tell
to
us
you
what's
all.
your question.
Yeah, I'm holding 300 shares of Ireda. Bought at 232. I'm from past 1 year. So should I hold this or exit? And if I exit, which one to buy?
Okay, and what's your holding period? Is it for the short term or the long term?
Maybe another 6 months I can hold.
All right, Kunal, another 6 months. Irida, what should she do? Should she hold on to it or should she exit and enter another counter?
See, frankly, 6 months is a little bit of a shorter time frame, if you ask me, because I would actually sense that maybe the stock would just about try to, meander at this range of 100 to 150 broadly for, potentially the next 2 to 3 months. Maybe if the markets start to show signs of very steady recovery, that's where you may expect that IRIDA may also come back towards a breakout, that 150 mark. But there are a lot of probabilities over here. So it all depends on how the market shape up. If you're looking to bring out this holding and look at some other names, I could recommend few stocks. I think Tata Steel, for example, is one of the stronger names which you can consider at current levels. A formidable large cap stock, metal sector doing fairly well, and it looks like that this rally is going to sustain, for many of the metal counters for the entire calendar year, and if not, maybe trickle down to the next year as well. You might want to look at some of the private sector banking names. I think these stocks are coming out from a zone of major underperformance from 2024-25. Something like ICICI Bank, you may want to consider IndusInd Bank or HDFC Bank in that sense. So shifting towards these large cap stocks could be a far better proposition if you're looking at this as a not just as a short to medium term bet, but even as a portfolio adjustment which you're looking to.
All right, there's one more short-term and long-term question for both of you. Let's just go with the long-term one, and I'll come to you, Rajesh, first. This is Nikhil from Mumbai, and he's an intraday trader as well as a long-term investor. He's got 15 shares of CAMS at 787.56, and he's kept it for long-term, but he wants to know your view on this particular counter, and also if anything along with this can be bought, keeping the longer time frame in mind.
These capital market related stocks are doing very well, and especially RTA agents like CAMS or KFIN, considering the fact that we have seen SIP numbers increasing day by day, and that's the biggest positive. And not to forget the kind of new IPOs coming in, the flurry of new IPO in the last 6 months or so. We have witnessed so many IPOs, and for the next 6 months or so, there's a good lineup. But these IPOs pay well for these kind of companies. So at these levels, one can even buy camps for a longer term horizon. And as far as other companies in the same line of same segment, I would say CDSL would be a good buy. Even BSE is a good buy if it crosses 3100 and stays there. So there are some of the stocks which can be accumulated for a longer term horizon.
One more short-term view. Kunal, are you comfortable with his buy price, 787.56 for short-term?
For CAMS?
Yeah.
I think it's still on the higher side, but then I would still suggest that you can hold on to the stock as of now. It's going through a downtrend. There is a possibility that the stock may extend the downtrend for maybe another few weeks before it finds some good support, because the corrective wave is still not completed for CAMS. So that could be a short-term get into the stock price. But then the long-term charts are extremely positive. I would sense that say 660, 600 is a very good base for CAMS over the medium to long term. And in case of the stock, assumingly happens to come back to this territory in this leg of correction, it's a good zone where you may even look to add further and try to bring down your net cost price. So long term wise, I would suggest a hold.
All right, it's a long-term hold on CAMS. Let's move on to the next question now. This is Krish who's writing in from Chennai. He says he's a senior citizen and his question is to Kunal. He says he wants you to choose between JK Cement and Grasim. Which one will be a good choice for the next 3 years though? His time horizon is 3 years, Kunal. He wants you to choose between JK Cement and Grasim.
See,
and
of
what
course,
should be a good entry point? I'm sorry.
Yeah. So I think if I have to choose either of the two stocks from current levels, I'll go for JK Cement. Because of the solidity the stock has shown in terms of the charts over the last 5 years, 10 years, the fact that even at current levels, the stock is showing signs of a consistent price uptrend. The only concern with a stock like Grasim is that the trends are, very fickle in nature. The stock consolidates for a prolonged period of time, and then all of a sudden, when you see the sector moving well, that's where you start to expect Grasim goes into a breakout mode. But JK Cement, on the other hand, has done reasonably well throughout the last 5, 7, 10 years. Even at current levels, I would believe that the stock is available at a good corrective zone. So the risk reward is positive if you're looking to enter at current levels for JK Cement.
All right, this question is coming in for Rajesh, and our viewer wants to know your take on electrocasting. 666 at 101. That's the buy price, and it's a long-term hold, Rajesh.
Which stock you said?
He's written electro casting.
Okay, electro steel casting. That's
Yeah.
it. They are the largest DI manufacturers in the country. Have been doing very well. The stock price has corrected from the highs of, if I'm not wrong, 200 plus levels to 70 odd levels, just because of the fact that new orders has not been coming and there have been inventory pile up at the producers level from a very, very long period of time. Otherwise, the company has a strong balance sheet, doing very well. So maybe it will take some long period of time, maybe 2 years down the line, you can again see prices in three figures. So somebody holding can continue to hold.
All right, so that's the view on electrosteel casting, and let's slip into a short break. We'll take your questions on the other side of the break. Keep writing to us. The number is flashing on top of the screen. We'll be right back. Thank you.
The government may be exploring pressures to boost foreign portfolio inflows, including a possible tax-free regime for pension and endowment fund equity investment. The industry has also pitched lower security transaction tax on cash market trades compared to derivatives.
December CPI data shows a mixed momentum on a month-on-month basis, with core inflation firm at around 1.3%. Urban inflation picked up sharply, while rural inflation also moved higher. Food prices remained in deflation, led by steep fall in vegetable and pulses.
It's the last day of campaigning for the high voltage BMC polls. All parties are leaving no stone unturned as they push through the final lap before Mumbai votes on Jan 15. The Thackeray brothers are fighting the polls together while the Mahayuti has already won 68 seats uncontested.
Welcome back. You're tuning to Buy Now, Sell Now, where we are getting all these stock-specific questions answered. But quickly, let's move on to the earnings corner first. Well, TCS, IT giant, reported its quarter 3 numbers yesterday. And TCS has reported a mixed set of numbers for the quarter gone by. My colleague Sajid Mangat caught up with the management to understand on how the AI is helping the company and the growth from it. Let's take a look.
We said 54 of the top 60 clients.
Yes. So how has it improved now?
It has improved. Like, see, I would say like one thing is almost all major customers of ours. In fact, more than 85 to 90% of the customers with whom we make at least 20 million annual revenue, we are engaged with them in helping them adopt AI. And so there is and our customers are very keen to see how they can get value out of the AI because they want to participate in AI adoption and get the ROI from coming out of it. So it's increased, it's ever increasing every quarter, like Shyati said. On a Q-on-Q basis, we had close to 20% growth in our AI revenue. And we expect that acceleration and momentum to sustain.
And if I may add,
yeah,
I think
please.
what is also different is, it's also a lot of proactive engagement with customers on AI. So, you have those initial conversations. We are running what we call Innovate with AI sessions with our customers to help them identify those high impact ideas that they need to implement. We implement them within a quarter, you see the results, then you roll it out across the enterprise, and also you come up with newer ideas. So I think that whole approach is very proactive in terms of helping them, customers identify ideas, building it, scaling it. So that's what we are seeing, and compared to Q2, we scaled these efforts quite a bit across verticals and geographies.
Kriti, if I look at investors, foreign investors, in 2025 calendar year, they sold off IT companies worth $20 billion. And the argument was that Indian IT doesn't have an AI play. Do you think that is a wrong assessment of how Indian IT is and the shape and size of it?
So if you look at Sajid from TCS perspective, okay, last quarter when we met, we said we have set our aspiration to be the world's largest AI-led services company. And we also said that it's based on 5 pillars on which we are going to be going towards this vision. And on one hand, like on how are we delivering the services to our customers, we clearly define 5 levels of autonomy through which our customers can adopt. Then this quarter, we also unveiled our full stack AI play. Full stack AI play starting from infrastructure to intelligence. What we call infrastructure to intelligence as a full stack AI play, where we have the ability to offer solutions to our customers across all the layers of AI end to end. So we believe that we have, like in fact, TCS is probably very uniquely positioned to offer services to our customers across the play and more than one layer. Like it's for some other customers, we'll be building models, building agentic platforms, building agents, and helping them gather intelligence. For some other customers, we'll be building an AI data center on which we'll be helping them to do the inferencing and then do the small language model. So we have a multi-layered play here, and we are very confident that TCS will be in the forefront.
All right, so that was top management of TCS, but then let's talk about HCL Tech. HCL Tech reported mixed set of numbers for the third quarter. Revenue grew 6% compared to last quarter, higher than analyst expectations. However, profit dips on the back of one-time charge of 956 crores due to new labor code implementation. Now, we caught up with C. Vijayakumar, who is the CEO and MD, and CFO Shiv Walia to understand what's the way ahead for the IT major. Listen in.
We want to build a strong, profitable, growing business. You've seen our margins have been in a stable range, 18 to 19% for a very long time. This year, only because of a certain restructuring cost, we are delivering 17 to 18. And other than that, we are very conscious where to really participate and where to walk out of the deals as well.
All right, let's slip into a short break. After the break, we'll come back and get your questions answered. So keep writing to us. Let's take a break and we'll be seeing you on the other side.
Welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific questions. You can WhatsApp us your queries on the number that's flashing on the top of your screen. Rajesh Agarwal, Kunal Bothra, both of our guests are live with us who are answering your short-term and long-term questions. And a very interesting question coming up. And this is from Mr. Subrat Mukherjee from Kolkata. And I'm going to come to both of you. He wants to buy something for an upcoming budget. Now, that's the theme that he wants to catch on and cash on. So, Rajesh, let me just come to you first. All right, any specific sector and pick that you might want to recommend, considering that there could be, positive announcement for that particular counter or sector?
See, Kavita, being fundamental analyst, it would be a very difficult call for me to give any investment ideas for 10, 15 days because it's already 13th today and the budget is on first. So it's only 8, 10 days of trading session. So it's better not to take an investment call for such short period of time rather than a trading call. But still, if somebody wants to insist, we have seen in the past few years that rather always that whenever budget approaches stocks, sectors like railway, defense, education, they start moving up. So at this point of time, even if something meaningful doesn't come in a budget for defense, I think defense can be a good story, not only because of the fact that they have good order books for domestic orders, but even international orders are pouring in. The execution visibility is there. Government push for defense modernization is there. The order book gives visibility for next 3 to 5 years, I would say. So defense can be a good sector to look at.
So railway defense can be on your radar, but then Kunal, any specific name and with specific targets?
Yeah, so I think there are a few stocks which generally have done reasonably well on the budget day or post budget on the Feb month. One of them, interestingly, is India Mart, the stock which is already at a multi-week low. That stock has done reasonably well on a consistent basis over the last many years. The last 5-6 years of the data for the stock price. So that's a stock which you can consider buying at current levels, specifically with the fact that the stock is also at a multi-week, multi-month low. So I think at current levels of 2150 thereabouts, you can consider a target of at least 8% to 10% broadly for the stock price on the higher side. Defense stocks, I'll agree. I think that's another space which you can consider buying. Maybe names like Masscon Dow, GRSC, Bharat Dynamics, BEL. There are a lot many stocks to pick and choose from the defense pack. You can consider this sector as well.
All right, so those are the stock recommendations right before the budget. Thank you so much for that, Kunal. But before we move on to your questions, Indian government bonds have retreated after Bloomberg Index Services held off, including them in its global bond index, now saying that they will keep the review open and ongoing. My colleague Anurag Joshi is joining us with details for this. Let's take a look.
Yeah, Bloomberg indexes have held off the full inclusion of Indian government bonds in its indexes, and this follows a feedback which Bloomberg had sought from market participants. Bloomberg said in a statement that the market responses indicated the broad support from the long-term trajectory of the Indian government bond market, and the feedback also sought on the potential eventual inclusion into the global indexes. The responses, while they acknowledge that significant progress has been made, the same responses highlighted importantly that operational and market infrastructure consideration that meant full evaluation before the indexes. Bloomberg will make another announcement about this, which would be in the mid of or late January about this. But one of the key things that Bloomberg highlighted was that one of the considerations before the full inclusion happens will be that will include current the consideration, which include the current lack of fully automated trading workflows, settlement and repatriation deadlines associated with the post trade tax processes, and the complexity and the duration of the fund registration procedures.
All right, Anurag, thank you so much for all those details. So that's a review of Indian bonds that's going on. But then let's move on. And Kunal, I'll come to you. There's a question coming in from Pratiksha from Muscat. And she needs your advice on these counters for approximately 6 months. Chambal Fertilizers bought at 525. And she's got GNFC at 575. Both of them are in losses for her. But then what is recommended? Hold, exit, or maybe average at this level on both these stocks?
So I'll suggest an average on both of them. And my assumption is that these are not the only stocks as part of your portfolio, and you'll have a much more stronger core portfolio. Specifically on both of these names, I think Chambal Fertilizers has already gone through more than a 20% to 30% correction in the last 12 months or so. Same is the case with GNFC. The stock has corrected from 750, 800 to almost 450, 470, where it's trading right now. So both of these stocks have gone through a decent sized correction in the last 12 months. They are at a strong support territory. Chambal Fertilizers also, I think, has been holding on to this 400 to 450 kind of a trading range for the last few weeks. Same is the case with GNFC. So both of these stocks have gone through a sharp correction, have also gone through a recent time-wise consolidation, are available at a good risk-reward perspective at current zone. And if there is a scope of a recovery, you might expect that both of these stocks could try and come back towards a breakout. They are 200 moving averages and potentially a little bit more higher from the current levels. So which means you can expect at least a 10% to 15% recovery into these stocks in your 6-month time frame. So I think in that sense, good time for you to average out both of these stocks.
All right, so that's the view coming in on Chambal Fert and GNFC as well. Let's move on to the next question. Now, this question is coming in from Mohan from Talcher, Orissa. He says that he holds 20 shares of Dixon Tech at a buying price of 15,300. He's been holding it for the past 3 months. He's a retired employee. He wants to know what should he do. Firstly, Rajesh, let me come to you for Dixon Tech, because Dixon Tech, though fundamentally is a strong stock, the valuations have always been a concern for Dixon. But now that Dixon has fallen so much, in fact, it's fallen almost 30% in the last 3 months. Is this the right time to get into the stock and to hold on for a longer period of time?
Nikita, you said it right. The fundamentals are very strong with businesses expanding into mobile manufacturing and even laptops. With the PLI scheme helping them and all those things, but still the valuation, even after these correction, I think on a higher side, and there might be some more correction. So for anybody thinking of buying at this point of time, should at least wait for maybe target of levels of 10,000 odd rupees before putting in money. So at this point of time, it's a avoid from a side.
All right, one question directly for Kunal, and okay, this is a question for Kunal, but then the time horizon is for 3 years. So maybe I'll come to both of you. So Kunal, I'll start with you, because since the caller, his name is Krish from Chennai and he's a senior citizen. So he wants you to help him decide JK Siemens or Grasim, which one will be a good buy?
So I think JK Cement is something which I would suggest at current levels. The stock looking fairly balanced, a lot more attractive at the current juncture. And I think compared to Grasim, it's a more trending stock with respect to the recent and the medium term long trends for JK Cement. So I prefer that.
All right, Rajesh, you're buck too on JK Siemens for almost 3 years.
I think both are equally good, and one could do better by putting 50% of money in JK and 50% in Grasim. Because of the fact that JK Cement is doing very well, I would say. They are into white cement, and that segment is doing very well. There's a premium cement. They have a plant in Nimbahara, Rajasthan, that's doing very well, I would say. And as far as Grasim is concerned, that's a holding company of Ultratech, and Ultratech, by its share capacity and the kind of expansion it has, it's a huge, huge company, I would say. And apart from Ultratech, holdings, they have their own businesses of which are doing very well. Even they have moved into paints too. So at these levels, the valuations are also attractive. So I would suggest put 50% money in JK and 50% in Grasim.
All right. So that's the view on 50-50 on in Grasim and JK Cement. Let's move on to the next question. This is coming from Murli, who's writing in from Andhra Pradesh. He holds Anand Rathi at a buying price of 312 rupees. He needs a 1 month view on this. Kunal, Anand Rathi Wealth that has reported its Q3 numbers also. In fact, the stock is up in a way or more than 2.5% on strong set coming in for Anand Rathi. What would be your view on the technicals for the next 1 month?
A good stock, decent chart. The last 4 to 5 weeks also, we've seen the stock trending quite well from 2800 levels thereabouts to now 3150 where the stock is trading. So I'll suggest that if you're looking at a higher target, you might want to look at targets in the range of 3225 to 3250 for Anand Rathi in the very short term.
All right, so recommendation is of hold. Mr. Toms Vergis wants to know about Paytm. Rajesh, I'll come to you. He bought it at 1367. What's the view for next 12 months?
It's a white from my side. Although the numbers have been improving, but still that's not justifying the kind of valuation still command. So at this point of time, there are better fintech companies, I would say, or go for pure NBFC like a Poonawalla or a Jio. That would be a better choice.
Okay, that's the view on Paytm. Let's move on to the next question. This one's coming from Thomas George from Cochin. He says he's 5,000 shares of Federal Bank. He's bought it at a buying price of 120 rupees. What should I do? He's not given a time horizon, but Kunal, let me come to you for a tech check on Fed Bank. 120 was his buying price. He's made his profits, but should he hold on to it or should he book out?
I think you should hold on to the stock even at current levels. I understand that the recent price correction is a little bit more on the steeper side for Federal Bank, but then such kind of breakouts for the stock price indicates that you're looking at a new trend altogether building up. So if time is not an issue, if you're okay holding on to the stock from a further time frame of say at least 12 months to 18 months, I believe Federal Bank could be a good stock which you can consider to hold on.
All right, Kunal, one more short-term question coming in. This is from Vidya from Chennai, and she wants to know, is it a good time to enter JSW Energy, Uno Minda, and also, along with that, any other short-term pick which she can enter in?
See, I think both Uno Minda as well as JSW Energy itself are very good bets at current levels, because it looks like that both of these stocks are holding above their key moving averages. Uno Minda, for example, even in this last 5-6 days of correction at current levels of 1200 thereabouts, is still holding on to its 200 moving average. So that tells you that maybe the longer term trend is still positive for the stock price. Same is the case with JSW Energy. So both of these stocks are looking attractive. If you're looking at maybe a short term bet at current juncture, as additional bet, I would recommend maybe something like Tata Steel or IndusInd Bank at current levels. I think both of these stocks are looking quite strong with respect to their overall sectors as well as on an individual basis also. And from a swing perspective, I would look at say a 5% to 7% upside in the very short term for both of these names.
All right, let's move on to the next question. This is Vijay Kirti, who's writing from Chennai. She says she holds DLF 130 shares at an average buying price of 761. She wants to know what should be the right strategy for this stock, and a short-term outlook is what she's looking for. She's sitting at a loss, Kunal. What should she do with the DLF now?
See, I think you just need to hold on to the stock price as of now. The corrective wave is still not settled out for DLF. There is a scope that the stock may correct a little bit more further, because it looks like that many of the real estate stocks, they generally tend to bottom out and start to rally when the market sentiment becomes a lot more positive, and we are not in that kind of a zone. So maybe in the short-term charts, you might see the stock going to a correction further for the next maybe 1 or 2 months or so. But if you can extend your time horizon to a little bit, maybe 6 months, 1 year approximately, then the stock stands chance for a very good recovery potential over that kind of a time frame. Because once these stocks bottom out, the market sentiments bottom out, and if you start to see the news flow becoming positive, you expect that real estate sector and the real estate stocks, they generally do very well for themselves. So it all depends on whether you can tweak your time frame. If you're okay with doing that for DLF, then it makes sense to hold on.
Perfect. Rajesh, this is a medium-term question on Godrej properties from Mr. Subrat Mukherjee from Kolkata. Right time to buy.
See, strong company, I would say, with good projects doing well. At this point of time, real estate stocks are facing the heat, but I think Godrej Properties can be a good buy for a longer term horizon. By long term, I mean anything between 9 to 12 months. A 15 to 18% return from current market price is quite possible. So one can buy.
All right, let's move on from Godrej Properties to the next question that's coming in. This is from Silva from Chennai. Wants a long-term view, 3 years view on GAIL. He's bought it at a buying price of 201 per share, and also Amara Raja batteries at a buying price of 775. What's your view, Rajesh, coming to you for GAIL and for Amara Raja batteries for the next 1 year?
Both are strong companies, fundamentally strong, I would say, with strong balance sheet. I take one by one. GAIL gives out good dividend, good play on gas. They have huge pipelines and doing very well. At these valuation, one can even buy. Amara Raja, as far as Amara Raja is concerned, they have good. They are the one of the two largest battery manufacturers, I would say, in the country with good OEM tie-ups, doing very well. They are moving into EV also, doing expansion. And at these levels, this has also become very attractive with the kind of correction it has witnessed. So maybe a target of 1,050 odd rupees in the next 6 months is quite possible. So both are a buy from our side.
A buy from Rajesh's side. And with that, it's a wrap on this edition of Buy Now, Sell Now. Thank you so much, Rajesh and Kunal, for being on the show and helping our viewers with their stock-specific queries. And time to sign off.